everybody. It is another episode of the Three Money Amigos. So today, one of the amigos is missing. It is Miss Joy Sistrunk. We will do an introduction of her after we introduce ourselves. So, Beverly, if you can tell everybody listening who you are and what you do.
I am Beverly Winstead. I'm known as the IRS help attorney, and I help people that typically have problems with the IRS. Exactly what I just said. IRS help attorneys, right? Whether you going through an audit or whether or not you owe IRS and you're trying to figure out how you're going to work out a deal with them, or if you feel like you've been treated unfairly by the IRS and you want to go into court and sue, I help with that. So excited to be here today. Back from vacation. Last week I was out.
Yes, and my name is Brent Simpson. I am one of the co-founders of Investing Education Academy, a platform where we teach people how to invest in the stock market, cryptocurrency, and other investments. So if you've been wondering how to make your money work for you, now may not feel like a good time, but it is. So we're going to talk about today. So the market's been crazy. We're talking some companies down 40% in the last month. So, the thought is, how do you make a positive out of something negative? And so today we're going to talk about how to capture losses in your investment portfolio. What does that even mean? So let's start there. And before I go too deep in, I did neglect to tell you the third Money Amigo is Joyce Sistrunk of Premier Group Services, a CPA accounting firm. And she is not with us today, but if you are looking for her or you want to learn more information about her, you can go to www.pgservicesinc. Again, www.pgservicesinc. Or you can
Joy's
go
probably resting.
right. Tax season was real. Or you can go to www.pgs slash or dash CPA. All right. So with that being said, how do you capture losses in your investment portfolio? What does that even mean? Essentially, when the market is down and you may have a stock that, let's say you bought it, just to give some numbers to this, you bought it at $100. It's currently trading at 50. So you're thinking, okay, the sky's falling. This is horrible. There's no good that can come of this. But maybe your portfolio overall is up 30, 40%. And so now you're in a tax bracket where every dollar matters, and you're trying to figure out, how do I offset some of these gains? You can do it by by offsetting it with losses. However, there's a catch. The only way to actually capture a loss is to make a sell with a stock that's actually down in value. So you can't just say, well, it's down, so I'm at a loss, because it's what's called an unrealized loss. In the eyes of the IRS, you didn't lose anything yet. So it's not until you sell it is it actually realized, and now it can be used to offset your gains in other parts of your portfolio. Now, Beverly, when someone does take that strategy, what is some of the advice that you might give to them?
So it really just depends, like you said. Let's talk about some of the stocks that are down right now. Let's start
Yeah,
there because
yeah,
some
we can
people
start with
may be.
Netflix.
That's exactly what's in my mind. Netflix, like Netflix last year was killing it, in the pandemic because people couldn't get out, they couldn't go to the movie theaters. So you could see the uptick in subscriptions, and Netflix was really killing it, right? It was a time I had Netflix in my portfolio, and I was just holding because it was just doing so well. Now I'm in a situation where I still have Netflix in my portfolio, and I'm getting slammed right now, right? I'm getting crushed because it is. I haven't even looked at it. I don't even know how far bad it's dropped. But one of the things I saw was that Netflix lost 20,000 subscribers. Is it 200,000 subscribers?
It was 200 plus. Now, just for the records, I think it was up to 500,000. A big reason for part of the loss was their decision to pull out of Russia, and so it was an immediate drop in subscriptions. In addition to the fact that the times we are in, it's a lot of competition coming to the market, and
Yeah,
people
and
are
they raised rates.
yeah.
Yeah, yeah, they raised
And so
rates.
it's a lot of things affecting it, but at the same time, the biggest hit initially was them pulling out of Russia.
Okay, so you taught me something. I thought it was only because they raised their rates, and then also I saw that they were trying to figure out how to handle this the sharing of passwords,
Mm-hmm.
and so people are saying, "Hey, I don't know if I want to be with Netflix anymore." So that's good to know.
Yeah, and also too, they're looking to change their platform. Where right now there are no commercials or anything else that run on inside of Netflix, but that also means that they've never targeted. I mean, for lack of a better way to describe it, a low income user, and so now they are reconsidering, low income users, being like they may go back to having like a $6 monthly fee, but that fee is going to come with
Commercial.
commercial.
Yeah,
So
advertising. So that's a
they
whole other source they haven't tapped into
they have never
marketing
tapped into.
dollars. Yeah, yeah.
So for in $200, they're about $200 now, and for me, 200 was my like stop loss on the company. So I am now like, do I capture? Actually I still won't be losing, but it's lower than what I feel comfortable. But if I was at a loss right now, this would be a stock that you really want to look at. You're talking about almost a 40% drop in like the last 5 months. And
Right.
so, if somebody pulls out at that point, how do they account for that loss? How does that loss offset their taxes?
So let me say this because I listen to IEA. I'm a member of IEA, the Portfolio Panther, which is the highest group. So even when I think about what makes sense for me, you always talk about, you always teach us about what is your investment strategy, right? Are you in it for the long haul or are you in it for short term? What actually makes sense considering ultimately what you're trying to do, right? So I think I always want to start with that overarching like principle when I'm looking
Mm-hmm.
at my own portfolio. And it's like, okay, and does this company have the basic fundamentals where it can bounce back and recover? So let me say that. So I am listening to what you have to say, right?
Yeah.
And I think Netflix does. I think it has a
Mm-hmm.
solid foundation. I think it can bounce back, honestly.
Mm-hmm.
But if it was a company that I wasn't so sure about, um, for me, making the decision to sell when the stock is at a loss really is going to have to do with, like I said, do I think it's going to bounce back? But the other thing is, do I need to reduce some of my income? Or is there another stock that I'm planning to sell at a high rate and take the profits? And I need another stock to offset any losses that I might have to
Mm-hmm.
kind of put me back at even keel. So that may be one of the things I'm looking at. Another thing I'm looking at, or do I just want to sell it and get rid of it and then take the loss on my tax return? It really is important to kind of know that even when I think about this, if that's the only thing that I'm going to sell in my portfolio, then losses are actually even capped. So if I sold a $10,000, if I sold and had a loss of $10,000, if I didn't have any other income, passive income
Mm-hmm.
to um, to go against the loss, then I'm only going to be allowed to take $3,000 in this year, and then the rest of it is going to be carried forward until I'm able to use the full remaining amount.
So that part is important. This is why we say it's important to talk to your tax professional before you make these decisions, because in isolation, number one, this is not financial advice. This is not tax advice for any one individual. This is just a conversation of things that you should be aware of when it comes to this type of market. Really should be aware of in general, but everybody's situation is different. Please take this information and consult your tax advisor before making a move just solely based off listening to this podcast. Um, Now, with that being said, you can also go to irshelpattorneys.com and set an appointment with Beverly's team and actually learn what it is that you might not know before you make this decision, not after people. And there's so many people that come to us like, I did this, now fix it.
Mm-hmm.
And we're like, if you would have just talked to us before, it would have been cheaper and it would have been much less of a mess. And so, this environment. So again, I say this. We were talking about Netflix, and this is why you talk to also your investment professionals, because if you've owned Netflix, what Beverly was talking about, for 5 years or more, you're still up. And I have the numbers up right here on from Google. Over the last 5 years, Netflix is still up 31.9%. Now check this out. If you owned it in the last 6 months, that means that you didn't buy it, you haven't had time in the market. You just recently bought it in the last 6 months. Netflix is down 69.97% in the last 6 months. So again, let's look at that. Last 5 years, you're still, even with that being down 69% right now in the last 6 months, last 5 years, you still will be up 31.9%. This is why time in the market beats trying to time the market. And so, for those of you all who are 6 months in, and you're thinking, well, okay, that 5-year thing's cool, but that's not me. So let's talk about the last 6 months. And if you're in the last 6 months, and you're down 70% on this investment. You want to think, like, number one, do you have time to stay in the market? That's number one. Fundamentally, not a whole lot has changed. Competition has changed for Netflix, though. I do want to be very real about that. Competition's changed, and with them pulling out of Russia, you're talking about hundreds of thousands of subscribers they have lost. So in addition to that, with inflationary pressures coming in, people just are, like, luxury goods are getting cut for some. Other people are buying more luxury goods. It just depends on what side of the fence you fall on. So you want to make sure you look at all angles, but then also benefit from this. If you, I hate to say it that way, but if you can use it to offset, just know there's a cap on it. You can't just sell. If you have 100,000 shares of Netflix, you want to consult your tax professional before you just go out there hitting the buttons to sell everything, and you don't know what you're really doing. Also, if you are looking at this now, you've been in it like 10 years, 5 years, 6 years, and you just look at the immediate, and you're looking at this very small window of what's been going on in the last 6 months, and you forget that you've owned it for 7 years, and you think, oh, it must be down because it's down 70%. No. If you've owned it for more than 5 years, you're still up about 30+%. And so that's still giving you an average of about 7% per year, which is pretty good, even with this in this environment. So just make sure you look at the entire picture. And if you have the ability to capture, no, Beverly, let me ask you one other question. If a person's trying to actually capture losses in their portfolio, is there any limit on the number of stocks they can sell in order to capture the loss?
What do you mean? Any limit on the number of stock? You can.
Like, if they sell Netflix, can they also sell Walmart? Or like, can they, if they have 10 in their portfolio and all are at a loss, can they sell all 10 and capture the loss? Or you can only sell like 5 different stocks to capture a loss in a given year?
So you can capture So when you talk about capturing the loss, capturing really has to do with the limitation of $3,000. So no matter if you sell one particular stock or 10 different stocks, right? The cap is still everything is going to get aggregated, and then it's going to be capped at $3,000.
Okay. No, that was a question. So
right, that's only if. But if you have additional, let's say you sell stock at a gain. Like, I'm trying to think in my portfolio, what is up right now?
there should be a few things up, but go ahead.
Tesla's down. It's
Today,
down slightly.
it's down today.
It's down today, right?
Yes.
But overall, I'm still, let's say, winning on Tesla, right?
Yeah.
Apple is probably still steady and up. So if I needed some cash to, purchase something that I wanted to purchase, then I may consider selling some of the Apple. Let's just say I sold $10,000 worth of Apple, but I wanted to get rid of Netflix. If I sold $10,000 worth of Netflix or $13,000 worth of Netflix, right, I would be able to I wouldn't have any gain because the 10,000 would offset each other, and then I would be able to take the additional $3,000 as a loss.
Got it. Now, if you're listening to that and you're like, oh my gosh, I didn't know it. Now you know. And this is just a fun fact when you were talking about Tesla. And I was like, today I went and checked their 5-year rate of return. Well, what do you think the 5-year rate of return is?
Probably still, maybe probably like 200%.
Okay. 5 years, 200%.
Yeah.
5-year rate of return for Tesla is 1,325%.
So this
So,
is
but this is again, it goes back to when you got in, because if you got in this year, like January, it's down 25%. And if you look at it, maybe you've been in for 6 months. If you got into this November of last year or December last year, you're down 12%. And this goes back to time in the market is normally going to be trying to time the market. 5 years, if you've been in Tesla 5 years, that's not a long time. You are looking at a rate of return of 1,325%.
so
So
I'll,
just
I'll put a
understand,
dollar
and
in
these are
into
reasons
the
why.
market.
Um,
So you said 1,000%. So that basically means that if I invested a dollar, then it now will be worth $1,000.
1,325.
That's amazing.
Yeah, no, it's like, but the thing is, it goes back to like if you look at it like in this narrow window, like, oh well, it's crappy right now. The markets go through phases like this, and when you do proper tax planning with someone like you can actually benefit from these environments. It doesn't have to all be negative, and so even the negative stuff can be positive in the right environment. So again, we just wanted to give you all that message today. We hope it helps somebody out there. And if you want to, check out some of the other podcasts we've done, you can go to 3moneyamigos.com and look for all the good stuff. Now, if someone is trying to get in contact with you, Beverly, how could they do so?
Sure, they can call my office at 301-306-1234. Again, it's real easy, 301-306-1234. They also can visit my website at www.irshelpattorneys.com.
And one of our 3 Money Amigos is missing. It's Joy Sistrunk CPA. And if you were looking to find out more information about her and her company, you can go to www.pgs-cpa.com. Again, it's www.pgs-cpa.com. And I am Brent Simpson, one of the co-founders of Investing Education Academy, along with Leon Noble. And if you've been interested in, I do want to figure out more about how to invest, what to invest in, when should we invest, how long, all the good stuff about investing. We can help you with that. You can join our community. We're growing. And right now is that time where you don't want to go it alone. The market is changing by the minute, and our updates have helped some people make some very important decisions in real time. So with that being said, we thank you for being with the 3 Money Amigos, and we will see you next.